Hey everyone, this is Sean Moran, and I'm going to start a live stream series. This first one is basically going to be about, kind of an intro. Obviously, I have a book if you're following the channel, and it's called Saving Your Future. And I talk about different things about how to kind of step by step bring your life to where you need to be financially and kind of model it after some of the things that I've done and obviously the reading I've done and just kind of share my thoughts and the idea of this live stream is going to be to share yours as well, ask questions, and build it so that over time we're going to be able to have that interaction. I'll be able to provide really quality content to you, and subscribe. What I'm going to do is I'm going to do this every Sunday night at 9 p.m. Right now, it's closer to 10 p.m. because I did one, but then it didn't come out right. I actually had my recorder set to the onboard microphone instead of the other microphone. So this is the first one, and there's going to be some growing pains. I'm going to get the video quality better, the lighting better, all that stuff. But I wanted to get started. Sometimes in life you just need to go and just push forward and do something. So this is going to be great if you guys interact, and that's the idea. If I'm going to be able to help other people, then that's what I really want to do. The way to do that is to subscribe, to be prepared for this at 9 p.m. on Sunday nights. And, to the extent that, we can grow this, I would love that opportunity. So what I'm going to start with in this episode is talking about the traditional IRAs versus a Roth IRA, similarly traditional 401k versus Roth 401k. And so what I'm going to first do is kind of start out by, explaining a little bit about what each is. So everybody probably is familiar with an IRA or a 401k. Either one is a vehicle in which you can save for retirement. So the difference between an IRA and a 401k is provided by a company that you work with. And if you don't have a company that you work with or the company you work for doesn't provide a 401k, then you can start up your own IRA, which stands for Individual Retirement Account. So the difference between the Roth and the standard is basically this. The standard, or traditional as they call it, basically allows you to save pre-tax money. And I'll explain a little bit about what that means. Whereas the Roth is after-tax money. And so that's the major difference. And then we'll talk about what that means in the future as well. So starting with the traditional IRA or traditional 401k, there's certain limits that you have each year that you can contribute. On the IRA side, it's lower than on the 401k side. Significantly lower unless you're over 55. But the idea is that you're taking a certain amount of money and you're putting it into retirement savings. So let's use a 401k, for example, where you can save upwards of $18,000. Basically, in a traditional, let's say, just to make numbers round, you put $10,000 into your traditional IRA this year. That $10,000, let's assume that you're in the 20% tax bracket. That $10,000 will not be currently taxed this year. So in other words, instead of, let's say you make $100,000 and you put $10,000 into your into your traditional 401k. And I like to use round numbers, so I'll use 1,000, 10,000, that kind of thing. So you make $100,000 and you put $10,000 into your traditional IRA. Basically, for the year, you're going to pay income taxes as though you made $90,000 instead of as though you made the $100,000. So that's what it means by tax defer. So that $10,000 that's not taxed is at 20%, saving you $2,000 this year. So multiply that by this year and the next year and the next year and the next year and the next year and so on. And essentially, you can see where the savings would add up. So if someone was going to save in a Roth, and so let me explain the Roth then. The Roth is essentially where you put post-tax dollars. So that means you make $100,000, you're going to be taxed on $100,000, and then you're taking $10,000 out of what's left there and putting that into a Roth IRA. Why would you consider doing that? Well, the promise is that eventually, when you do get to retirement, that Roth IRA money will not be taxable in retirement. The traditional IRA income will be taxed in full in retirement. Why? Because you're not paying tax on it now. You have to pay it at some point, so you'll pay that in the future. what so what's kind of the advantage or disadvantage of either one? To me, the traditional IRA is where I would recommend, and I'd love to hear if you disagree. Please comment below and let us know why. And and again, I'm not saying that there's any one way to do it. That's why they have the multiple. But to me, the risk you have here is that we currently know that if you invest in a traditional IRA, you're going to pay you're going to defer the tax now, and you're going to pay it when you retire. So you have 10, 20, 30 years of deferring paying income tax. So in my example, you save $2,000 this year. If you stay at $10,000 every year, $2,000 next year, and the next year, and the next year, and the next year, and so on and so on, every year you're saving $2,000. So that $2,000 that you save could be, could mean maybe you can invest $12,000 instead of $10,000, or on the Roth IRA side, maybe you'd only be able to invest 8 as opposed to the 10. But either way, the point is that you're saving $2,000 each and every year. Then when you get to retirement, if you're taking money out $10,000, $20,000 a year, whatever it might be, that money would then be taxed in full. On the Roth IRA side, you're paying the tax now, and when you retire, it won't be taxed. Well, is that true? And that's the reason to me why it's not a good investment, because yes, as of right now, Congress says that if you're invested in a Roth IRA, when you retire, that money is not going to be taxed. But that's based on the current Congress. The way they spend in Washington, D.C., politics aside, we know that either party, they're spending like crazy. So at some point, 20, 30 years from now, they may feel like, you know what, we can't afford to not tax the Roth IRA. So now what? You've given up 20 or 30 years of a tax benefit to save money and not have to pay it in the future, and then they might change their mind. Or the current Congress might say, well, we need the money, and sorry, but these people that are maybe dead by now at that point, promised you something, and they never should have because they couldn't deliver on it. So sorry about that, but we're gonna have to tax you. Or maybe if you make over a certain level of income, then they'll be taxing you but not others. Whatever it might be, you're getting a promise now that we don't know for sure will be delivered upon in the future. So to me, you're taking the risk that a future Congress is going to agree with today's Congress and say, yeah, you retired, we promised you this, we're not going to tax you on it. I mean, when Social Security came around, they said that would never be taxable, and now the rich, or people that are above a certain level of income, are taxed on their Social Security earnings, whereas some aren't. So do you want to risk that you're going to be in a situation where you think you're going to not pay tax at that point, but you are anyway? So what did you end up giving up all the years, a benefit in order for a future benefit that was promised that you never actually realized? So that to me is the biggest concern about a Roth IRA and why you might choose not to get one. I personally don't recommend it because I feel like with the way spending's going, at some point in the future, that promise is going to be reneged upon, and you're going to be sorry that you've paid in taxes all these years for this benefit that you never get. So what are your thoughts? Do you think that that's the case? Do you see that that's the logic in that? Do you think, no, I believe that the government's going to make good on it, they promise that they will? I'd be interested in hearing in the comments below. There's no, I don't have a crystal ball, none of us do, so we don't know for sure how that's going to turn out. But that's essentially my concern there. So to talk a little bit more about our, what this channel is all about is, kind of the topics around finance, around the things that I've talked about in my book, but again, just pretty much any type of finance topic. Anything you're interested in, what's going to make this channel great. I know this is being the first live stream. I have to build up an audience so that people are going to join. I'm also going to have to figure out a way to, make the quality better and all that kind of thing. But I want to get this out and, want to get your comments and build on answering your questions, and eventually being a situation where people are asking questions live that I can answer. And also follow up in future episodes, discuss what you want to hear. I can talk about anything from, how to buy a car, how to save to buy a house, saving for college yourself as a student, saving for college for your children, what that should look like, and to me, saving for retirement is going to come before college, although some people put that on the back burner, but that could be another topic. So I want to know what you want to hear about. I want to know what you want to learn about. And I want to know what we can share back and forth so we can have that conversation and essentially build build each other up. I'm sure I can learn a ton from you guys. And if you disagree, I'm not offended. I'm not easily offended by that. If I can learn something from somebody else, that's what I'm all about. I keep on top of a lot of the finance subjects out there. I can talk about trading stocks, and again, any of the type of things that are in my book or just any finance topic. If I don't know about it, I'm happy to look it up. So hope this has been beneficial to you. It might be running a little bit shorter than some of the future ones. I want to try to make them about a half hour. If they go longer, great in the future, but hopefully we'll be able to interact and I'll be able to share some of my thoughts and ideas with you, as well as get some of your thoughts and ideas and just grow the conversation and help everybody get better at saving for the financial future that they want. So want to thank you for watching this, even if it's afterwards. And, tell me if you plan on making the next one, because that'll hype me up. And, I there'll be things that I'll look at and, I'll kind of plan for, what the topic of the next one is. But, if you comment below and you say, hey, I want to talk about buying a car, and I was thinking about buying a house, talking about buying a house, I'll do it based on what you're looking for. So I want to build that audience. I want to answer your questions. I want to interact with you. And subscribe to the channel, give a thumbs up if you like it, and definitely comment, because that's going to help the channel. That's going to help me provide better content to you and, build this journey. So I hope to enjoy the journey with you, and thank you for watching this. Look forward to next Sunday. Thanks.